Good morning, I'm Tim Carter. I'm a Client Portfolio Manager at npower's Optimisation Desk. Welcome to this morning's market update on Wednesday the 6th of January. So markets today opening much firmer, particularly on the prompt again. The key drivers for this are, number one, we're seeing weather forecasts now predicting cold snaps during next week with much more certainty, potentially reaching freezing by the 14th of January. Number two, we've got a comfortable power and gas system. Gas is balanced and power margins are very comfortable. And number three, we're again seeing oil prices dip lower as we're potentially expecting a further increase in US inventories. Those are your key headlines today. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So firstly, looking at those weather forecasts, again providing a lot of volatility in the markets. We're seeing front month contracts open up quite a bit higher than where they were yesterday. This comes as the cold snap for next week seems to become more prominent. We're expecting temperatures for Monday to have dipped 1 or 2 degrees below seasonal normal levels, and by Thursday potentially reaching 4 degrees below, which is just below freezing actually. This is likely to add around 100 MCM of gas demand in the UK from where we are today, so that's over a 50% increase due to largely just those temperature dips. Looking further ahead, we are seeing less reliable model runs predicting that weather could extend into the second half of January, so that's why we're seeing quite a bit of support for prices on the front months and even on the seasons as well. Looking at today's picture though, fundamentally the gas system is balanced. We've seen temperatures still above seasonal normal actually today, albeit just slightly lower than where they were yesterday. So demand has picked up a touch, but we're seeing reasonably healthy supply. Actually, Norwegian supply is just around 10 MCM down on yesterday, but that's been offset by a reduction in IUK exports of the same amount, which are now down to 0. We've actually seen LNG supply increase just slightly, around 3 MCM, which is helping to make up for the additional demand on the system today. Looking at power, we've got healthy peak margins again of over 12 gigawatts. That comes as wind generation, albeit low at around 2.5 gigs at the moment, is forecast to pick up towards 5 gigs by the close of today. Elsewhere, looking at the oil markets, as I said, they've dipped further today, trading in the mid-$35 per barrel range. That comes as expectations around US inventories last week are expected to have risen by around 500,000 barrels. That's actually in contradiction to API unofficial figures that were released yesterday that suggest it might be as much of as 5 million barrel drawdown on those inventories. So it'll be key to watch out for the official EIA data, which will be released at 3:30 today. And anything less than any kind of drawdown really will probably provide a bit more support to prices than where they are at the moment. Finally, the GB pound sterling has continued its rally this week. Against the euro, it's now trading at 136.4. That comes with more direction expected through this morning as a host of European nations release PMI service data. That's it for today. As always, have a great day and we'll speak to you again tomorrow.